Hey traders, this is Christian from Hertz Tribeca Trade Group with your macro and micro video for Sunday, December 18th. So taking a little break from football just to put together this video. And as always, if you've watched these videos before, I always like to look at take a step back and look at the higher level, what's going on in the macro world first, and then drill down to individual names, and then kind of look at that micro basis. So first thing I want to start with is ETF fund flows. What did we see last week? This is in the past, and then I want to go into looking into more into the future. But another huge week of equity inflows. This has been the same since the beginning of November. So right before the election, we've continuously seen a lot of money being added into U.S. equities via ETFs, and it's mainly been financial, industrials, materials, and we're seeing a little bit of a step back this week. So overall, almost $20 billion going into equities. But, a lot of what I saw in terms of money going in could be the result of a little bit of quadruple witching, where dealers, associated participants actually create and redeem a little bit, some of their positions. So I don't want to go into the noise too much, but in the sectors, you don't have to worry about that too much. But one thing I noticed here, as I mentioned, financials have seen just massive inflows since the election. But a couple of interesting things here. Some money being taken out of sometimes XLFs kind of skews the whole numbers. And but if you look under the hood, you could see that some of the, for instance, the KRE actually saw $221 million of outflows. So I would say a little bit of profit taking going on in financials last week, especially towards the end of the week. Technology also saw inflows, but one thing to notice, semis saw more outflows. This has been kind of jumpy back and forth the last couple of weeks. There was outflows a couple of weeks ago, then inflows 2 weeks ago, and now a little bit of outflows last week. So something to keep an eye on. There's been some really nice performers in that group, like NVIDIA, but we'll go into that group shortly. Materials, they've been pretty consistent, more inflows going in there. And then one area that I saw kind of moved from the top level to the bottom level, first week of outflows since the election, is industrials. So they lost about $331 million. Not huge outflows, but again, just kind of a little bit of a break in the trend. Other areas that saw outflows, the consumer names, both discretionary and consumer staples. I don't think that's a big surprise. Retail was very weak last week. That actually saw a $316 million outflow. Pretty large, 42% of the fund. And that bounces around. So a little of that could be going back to quadruple witching. We'll see if some of that money comes back in. So that one may be a little bit noisy. And then REITs, a lot of outflows in REITs. This to me makes perfect sense with the move in interest rates. So there's your summary for last week. Those are the domestic sectors. Another area that I found particularly interesting, which I have this up in our newsletter, flows for the week, which also gets, which is an area that I'm really interested in right now, is more international ETFs. This is not something that I've been very interested in for most of 2016, but besides emerging markets. But now we're seeing, this is now, I think, 5 straight weeks, which I think I have it up here. Yeah, here it is, right in bold, right in front of me. 5 straight weeks of inflows to Japan ETFs. And you could look at the DXJ ETF. This ETF does not have any exposure to the currency, and you can see this has been absolutely ripping and on a tear. I think the Nikkei is actually up 9 days in a row right now. So, while everybody's been kind of focused on what's been going on in the US and the massive rally here, look at what Japan securities are doing. Really, really nice, especially when you strip out the currency effect there. Also, Europe, not quite as much of inflows as Japan is seeing, but if you remember, for the first 3 quarters of the year, all outflows for Europe. So they stabilized about a month ago, and now we're actually seeing a little bit of money being added back into Europe. So I think these charts are really, really interesting. Also, developed markets. When you look at international developed markets, what are they? It's basically Japan and Europe. So they're actually seeing some nice inflows, and this again is a little bit different than what we've seen in the beginning of the year, where we saw a lot of emerging market inflows. China. I'm going to get to China in a minute, but $225 million of outflows. So that is starting. We haven't seen too much of these in the last couple months, but just in the last couple weeks, we've seen some outflows into China. So I'm going to get into that chart as well. But now with just now that we've kind of talked about what we saw last week and some interesting moves there, especially in international ETFs. What did we see from last week? This is just a quick summary from last week. Of course, the major thing was a little bit of a consensus change in interest rates following the FOMC, possibly 3 versus 2. Whether or not they actually execute that, that's another story. But it is what it is. That's what they're looking at for 2017. So more hawkish. A couple other negative things that I saw last week which is different. From the election and money flowing into U.S. equities. I don't think it was just the election and a paradigm shift. I think there was also a lot of positive economics that came out week after week. We saw copper rally back in November. We saw the Baltic Dry Index rally. Now these things are starting to pull back a little bit. So, for example, what came out last week? Retail sales were a miss. Housing starts were a miss last week. Industrial production was a miss. Now these weren't huge misses. Maybe the housing data was a miss, but nevertheless, it's a downtick from what the expectations were. So 1 month is not a trend. One data point is not a trend, but something to keep an eye on because all that data that came out last week was on the negative side. The U.S. dollar, this is really interesting. I put together the U.S. dollar versus the SPY. What has basically happened when the dollar gets strong? There has been a couple times where the dollar's been really strong before, and equities have moved down. And of course, this analysis is in a vacuum because there's other factors here. But you can see a couple times when the U.S. dollar, which is the candlestick chart, has been moving up. Back in 2000, of course, there was a bunch of other things going on here, but you could see that they tend to have a negative correlation. Now, is this worrisome? I would say right now this is the level of the dollar. If the dollar continues to move up, yeah, I would start to get pretty worried. And for the main takeaway right now is it's a headwind for multinational companies. So keep an eye on that dollar as it really broke out last week. The Baltic Dry Index, it's been down for 10 days in a row. So, while it's up firmly for the year, having it pull back a little bit, something to keep an eye on. It's the same thing with copper. Copper was a little bit weak last week as well. So some of these things, besides the election, that really kind of, we're very bullish in my opinion, are starting to pull back a touch. So it could just be that we're pausing a little bit, but these are things to keep an eye on. I also, in the newsletter, I go over all levels to watch. Small caps, I think, are the strongest right now. I've got several levels to watch. I'm not going to go through this because you have to pay for the newsletter. But these are all levels where you want to be long, where you want to be short. These particular indices, Qs, IWM, and SPX or SPY. So one thing I'm going to talk about here, which I want to emphasize, and I've talked about this in past newsletters and videos, and sometimes I'll repeat this because I think if it's a theme that's continuing and it's important, I'm gonna repeat it and I'm gonna reiterate it. JCJ, this measures whether or not stocks are moving together as a group, or if they're separating, if there's less correlation between names inside the S&P 500. Take a look at this. It continues to move down here. It actually jumped up here. The last time it jumped up was right before the election, when there's a little bit of volatility in the market. But you could see right now, you should actually go back 2 years, and you could see that stocks are not moving together. So, I find this interesting when a lot of index traders and a lot of traders in general don't look at these stats to figure out what kind of market they're in. So as a trader, as an investor, you always want to know, hey, what's going on in the market? Do I want to be an index trader? Do I want to just trade the SPUs, trade SPX, trade NASDAQ, trade IWM? Or do I want to invest in single names? Where are the biggest opportunities out there? And this shows me and this is very important, it shows that stocks are not moving together. Some stocks are moving up, some stocks are moving down. This is as much of a stock picker's market than we've ever seen in the last 2 years. So for me, I think that the SPX could have a little bit, it has broken out. There's no doubt about that. But I think that we could be moving sideways for a little while or slowly to the upside. Why? Because stocks are just are moving. You go through and you look at the performers on a day to day, and you don't see everything in the green. You don't see everything in the red. You see about 65% of your sectors in the green and 35% in the red, and vice versa. So there's a huge separation going on, and this is important because you just don't want to sit and especially if you're trading options, you don't want to just be sitting in a trade that may not be working or that's just kind of grinding. So always know the market that you're in, and then you can kind of make decisions based on what type of market we're in, what you want to position yourself in. Okay, so that being said, what are the sectors telling us right now? So every week I looked at all the S&P GIC sectors to figure out if the market is if the sectors are strong or if they're weak. So what we've seen since the election is a lot of sectors get stronger and stronger. But take a look. I use the Raptor indicator, which is a Tribeca Trade Group product, and it's basically telling me right now from last week when everything was rising, now everything is kind of pulling back. The technicals are in kind of a pause mode right now, and this is kind of what I'm feeling as well. I've reduced a lot of my exposure last week. I'm sitting right now in 85% cash, and I'm going to continue to look for aggressive option activity, and I'm going to look for sectors that I think are strong, but have also if sectors which I think a lot of them may have another at least couple days or few days of price digestion. I want to look and be patient as possible and until they do their thing, until they work off those overbought levels, which is what we saw last week, and take their time with possibly building, and I also want to look at for each particular sector where there's support and whether or not we're going to hold that support and start to turn to the top and to the right. So that being said, most of these sectors, financials, energy, industrials, materials, they have right now they're falling a bit. The momentum is falling to the downside. So I'm not ready for shorter term swing trades. I'm not ready to go back into these names quite yet. But I've got a lot of names on my watch list, which I'm going to bring out in a second here. Here's my conclusion. So basically, it's just be patient. I think we're going to get opportunities. We've got some defined support, which again, I've gone through. You have to be a paid subscriber to see where all the defined support areas are in the major indices. But we've got those levels coming up. They're not too far from where we are right now. So I want to get into some sectors to watch, and as I mentioned, international ETFs that I think are particularly interesting, and also mesh in the activity that we saw in options last week. So, for example, FXI, the China ETF, we saw a pretty big March put spread go up 50,000 times in FXI. So it looks like somebody is looking for some more downside in FXI. You could see that it's a pretty weak chart. Here's this March 34-30 put spread. They actually talked about this on CNBC in their options action trade. It wasn't the exact same trade, but a couple of things that I'm watching here is we had a break of value on the daily chart, and also we're just resting upon the 200-day moving average in FXI. So for me, I want to wait. I think the first sell signal that we saw was the break of value, the break of the green line. The second for me is the break of the 200-day moving average. So as always, I'd rather be a little bit late and be correct than be early and wrong. So that's what I'm waiting for in FXI. Just to kind of jump around a little bit, one name that really got attention last week for us and in the trading room, just a repeat buyer of OCLR. This is a tech name. This is involved in optical solutions and communications. Don't ask me what that means, but we saw call buying in two of the names in that group, OCLR and PTN. There was a story out on Friday that OCLR could be a potential buyout name for Finisar. So keep an eye on that name. More of a name, I think, to own for me in cash than in options because the volatility is very high in these names. And it's not that high of a stock. We're talking about a $10, $11 stock. NPTN also. So here's the detail of the activity that we saw all last week. Very, very positive. Next, like I said, I am jumping around a bit. Industrials, I mentioned last week was the first week since the election that we saw outflows, ETF outflows. Take a look at the technicals here. It's been in a really nice uptrend. Let's see if it holds support. It dipped into the value area. That's where it was on Friday, which is normally a sell signal, but maybe it's going to bounce right back here. If you like the industrial group, some individual names that you're long might be worth putting on a hedge in the XLI ETF. If it holds the 20-period exponential moving average, which is the blue line on my chart, great, and could be setting up for a move to retest the highs. However, we have to respect that it did fall into value, and if it falls and breaks the 20-period exponential moving average, I probably want to short XLI right now, industrials. And if you think about it, if the dollar continues to go stronger, who's it going to impact? Probably your industrial, your multinational companies. So keep an eye on that. I think that's an area that if it continues to go a little bit further south, could set up for a nice short move. This is a name that I've been talking about for the last couple of weeks. This is the agriculture ETF. I really like the individual names in here. I've been in and out of CF. I'm out of Dow. That was a name that we were long in the Tribeca Trade Group room as well. That's a name that's still on my watch list. Again, I'm going to get to my watch list again, but really, really strong about a week and a half ago. Pulled back, perfect. So I want to see if it holds, and I want to see on my indicator that the rating will get positive. Again, I'd rather be a little bit late here and capture the up move than sit in a decline and a choppy move. But again, if you look at the weekly chart, just to look at the bigger picture here. So big move up, but if you look, this ETF was about $58. So it's got a long ways before we get back to that level. So I like this. It's pulled back here, and I'm thinking about an entry right in here. Again, I'm going to let unusual option activity or aggressive call buying dictate my entry into this position. So I'm looking for potash, CF, mosaic, option activity in that for next week. That will help me get into those positions along with the technicals improving. I also have a little bit, of all the sectors that I looked at, this is my screen. Of all the sectors, these are all have negative ratings or falling momentum. Pink. What I'm looking for is green, is blue and green, and then I can kind of look at the technicals. Once I identify what names are moving, you could also look at the subsectors as well. One of the few things on here is IBB. So, healthcare and biotech has been just horrendous in 2016, and it's got a little bit of work to do. So what I kind of looked at here was, a couple things to watch here. We're approaching the bottom of value. We're also approaching the 200-day moving average. These are two things that I want confirmation before I even try to go into this. But again, if I start to see a lot of aggressive call buying, that's going to compel me to get in, provided that we're above the 200-day moving average in this particular group. All right, so those are a couple things that I've detailed in the newsletter. My watch list for the week. So you can see these are all the names on my watch list. The names that are in bold are names that I really like right now. A lot of these names, like for example, take a look at FIS. You look at other the banks; they look like they're in a little bit of a pullback mode, which is fine. Let them do what they're doing. I want to see if these things start to gear back up, and I'm going to participate with them. But take a look at a couple names where we've seen unusual option activity, or names, option activity that we don't normally see. Take a look at FIS. Here's a name that is triggering a buy signal, right? Much different than, say, Citigroup, which we've seen continuous calls go after. So this could be ready to gear back up. I would just rather wait for a little bit of a pullback. Wells Fargo also looks interesting to me, but notice they're not providing buy signals right now. Same thing with JP Morgan. We saw calls in as well, but a little bit overbought and not a buy signal right now versus FIS. Looks pretty good, and I want to see a move. I want to see a close above value in here, but I like that name. Other names that I'm watching, WETF, which is one of my favorite names right now. Why is that? because I just talked about the strong dollar. Their products, they manage ETFs, they manage things like DXJ, HEDJ. These are areas where I think look pretty good, and I think they're going to gather more assets, which is basically how they make money. So this is a name that I've made a lot of money in over the last 2 weeks. It's pulling back now. I only have a sliver of a position on left, and I want to watch this previous breakout zone. And if it starts to move, it starts to hold. Especially, it's not ready yet in terms of on the Raptor indicator, but something that I definitely have an eye on. So one of my favorite names right here. Just want to make sure it holds. Same thing with Deutsche Bank and Credit Suisse. Made a lot of money in these names last couple weeks. It looks like they are consolidating a bit. So I'm waiting for these things to settle in a little bit. Industrial names, not really anything on my radar right now that's telling me to get back involved. I am watching UPS. We just saw another big call spread that went up for June. So UPS, if it holds this top of value, it went down pretty hard last week. If it holds this and bounces, perfect. Would be a nice long setup. Consumer discretionary, a couple of names that I have in bold here where we've seen aggressive call buying in. Take a look at the chart of Yelp. Really nice looking chart here. It's trying to cross over as a buy signal. So the buy signal hasn't happened yet, both on the Raptor indicator and the value area indicator as well. If it gets into the value area, that would be a buy signal. So Yelp is one name I'm watching very closely. What else we have here? Couple of the grocery stores, food type companies look really interesting. We did see some calls in Whole Foods. Take a look at Whole Foods. If Whole Foods gets above 32.50, it did break outside of the value area on Friday. If it holds there, could end up being a nice long. Also, you've got the 200-day moving average. That's the white line on my charts as support. So you got some defined support there in Whole Foods. Take a look. It's been consolidating now for a long time. So this looks worthy of a shot to me. We could also look at Whole Foods just without a little bit less busy with just the major moving averages sideways. So it needs to get outside of this range, but definitely something I'm watching. I do not have a position on it right now. So that's it. I've got a bunch of other names, like Marriott is one name that just continues to move higher. Seen a lot of call buying in Marriott. And a lot of other hotel names. This thing is just ripping. So overbought now for about 2 weeks. This is what you want to see while you're in the name. Unfortunately, I'm not in this name right now, but a name I'm continuing to watch. Energy names. I really like some of the energy names. They've pulled back a little bit. Some of your very spec names like ESV and Seadrill. I also like Oxy right now, VLO and TSO. A couple of the refining names in here. These look pretty strong to me. Tech, really a couple big home runs last week. ON, just about out of this position, but still in, I'd say about 15% of my original position in ON Semi. Just another name that's seen repeat call buying in. TTMI, one name that I've just hit one target in, so I'm still in the majority of my position in TTMI. I like this name. We saw an aggressive call buyer about. I think it was in the beginning of the week, or if not, towards the end of last week. This looks strong. Trend looks great on this. I want to see a move above value in here, but I'm in this position. You can see I've got a lot of tech names. OCLR, we already talked about that name. A lot of names where I think need to consolidate a little bit. IBM, CTSH, AMD, Intel's on my radar, ST's on my radar. So all names that I'm watching particular levels in, and then international ETFs. So again, I really, really like this group. You look at, I detailed this in last week's video, HEDJ. This is Europe. If you go back and look at, just to kind of give you another frame of reference, take a look. It's been moving sideways for a long time now. We can actually bring this out to 2 years. and big sideways pattern, and it's caught up with the moving averages. It's now above the 50, the 100, and the 200 day. So you've got some nice defined support. I'm actually hoping this comes back a little bit. I did start a long in HEDJ, but I really want to add to this on a little bit of a pullback here. Because it is just a little bit extended here. If that happens, I'll be in that. But same thing when you look at Japan and Europe. This is DBEF. This is international developed. And again, they strip out the currency here. The currency's hedged, so the weak euro, the yen is stripped out here, and you can see kind of a similar pattern here, where the moving averages, the price action is now above the 50, the 100, and the 200-day moving average. Really nice here. RSX, Russia. Continue to see call buying in this thing, also breaking out here, looking great. A little bit further of a pullback, and I will add, or I will really like to get long this position here. Other names that I'm watching, just on the short list, I talked about FXI. IYR and XLU, as long as bonds continue to move down. We've been seeing big outflows in IYR. I am short IYR. Hasn't been working out all that great, but I do think that this eventually turns down if TLT continues to go lower. And then the comeback sector. I'm leaving this from last week. I started XLP as the comeback sector. It's one of those areas that's below the 200-day moving average, but we continue to see call buyers go after names like Cisco. I think SYY looks good. You can see this thing has been breaking out. Raw Stores, that's actually my favorite amongst the group right now. I know Raw Stores is not probably not a consumer staples name, probably more consumer discretionary, but I grouped it in with this group because I think it's more of a conservative or a different type of consumer discretionary name versus something like Macy's and Nordstrom, which actually got crunched last week. So Raw Stores I have grouped in here. Other names, take a look at Walmart. Oops. So just above the 200-day moving average, needs to get back above value here, but definitely a name that I think looks interesting. So I mentioned before Whole Foods, but I think a lot of these either food names or food stores look a bit interesting to me. And then a recent exit. Just similar theme, Dean Foods, huge winner in the Tribeca Trade Group room, and I did exit the position. It looks a little bit overbought, but I may be leaving a little bit money on the table here, and taking that money off. And if we do see a little bit of a pullback, I'll get right back into this thing. All right, so that is today's video. So that's the macro and micro video. Please go ahead if you like this analysis. Like I said in the newsletter, it is much more detailed and has defined levels. Go to TribecaTradeGroup.com. We do have a special deal right now. You can get half off the first month, and we've got a new program that we're pushing out as well. So visit us at TribecaTradeGroup.com, and thank you very much for watching this weekend's newsletter video. Have a great day.